Hi, this is Dave Means from Alpine Mortgage. It's currently early summer 2011. Interest rates have fallen down to the lowest levels they've ever been, where they were last year, and that's created a last chance to refinance. Our purpose today is to dispel a mortgage refinancing myth known as the 2% rule. Basically says that your new rate needs to be at least 2% less than your current rate in order for it to be worthwhile for you to refinance. That used to be true years ago, but it no longer is, and here's why. 20 years ago, when the secondary mortgage market was in its infancy, pricing flexibility was a lot more rigid than it is today. So everyone paid 2 points up front. A point is 1% of your loan amount. You also paid about 2 points in closing costs as a percentage of your loan amount. So right out of the gate, you were paying 4 points. Now there's another adage that you should try and break even within a 2 to 3 year period. And that's still valid today. In some cases, it might make sense for your break even to stretch to 4 to 5 years in a particular circumstance, but 2 to 3 years is still an optimal target. Now if you're paying 4% up front and you want to try and break even in 2 years, here's your break even, you need to have an interest rate 2% less in order to break even in 2 years. That's where the 2% rule came from. But here's how things have changed. The upfront cost of 4% now can be as low as 0%. Well, how much lower do you have to be in interest rate in order to break even in 2 years? Well, there is no break even because there's no expense to divide your savings into. So your break even is day one. So then the question becomes, how much lower does your rate have to be in order to make it worthwhile for you to refinance? Well, that's a function of how big your loan is. In this part of the country, our average loan size is about $200,000, so that's what I'm going to use for my example. If you have a new rate which is only 1/4% less than your current rate, that's going to save you about $500 a year, or about $15,000 over the life of your loan. Now you're not going to retire on that, but that's good money. If it ends up being 0.5%, that's going to double your savings to $1,000 a year, or about $30,000 over the life of the loan. Now who wouldn't do that? Now sometimes I'll get the argument, Dave, I see that I've got a savings here, but I actually think rates are going lower. Now let me warn you, no one can pick the bottom of an interest rate market. Not you, not Wall Street, no one. Besides, you're being penny wise, pound foolish if you do that, because this doesn't cost you a penny to do, and it only takes 2 to 3 hours of your time. Let's say you go ahead and you lock in your savings right here. Only one of two things can happen. Either interest rates go up, in which case you congratulate yourself on how smart you were and brag to all of your friends, or interest rates go down. If they go down a hair, who cares? If they go down just 1/4 point, we do this again. Remember, doesn't cost you a penny, only takes a couple hours of your time. Now there's one other point I want to cover. If you're not going to own your home for the next 2 to 3 years, then you probably don't want to refinance at all. But that means you're going to be buying a new home, and that brings up a potential to make a mistake that could cost you over $100,000. Basically, if you delay your transaction until interest rates go up only 2% over where they are right now, on a $250,000 purchase, that translates into additional interest costs of $115,000 over the life of your loan. So it would behoove you to try and move that transaction forward, even if by a few months. But that's the subject of our next video. Right now, I need you to fill out the information off to the right or give us a call at the phone number up above so that we can analyze your situation and find out how much money we can save for you. But please, don't delay. The last chance to refinance can disappear just as fast as it came about. This is Dave Means from Alpine Mortgage. Thanks for listening.